Hello everyone, this is Liv straight from Kalkine Studio and you're watching Go Green with Kalkine. While the Bitcoin craze is keeping the market players on their toes, let's look at Bitcoin mining and how it's worsening the climate change issue. The coronavirus era is observing the world going crypto crazy. The dramatic surge in the value of Bitcoin has been reviving investors' and businesses' interest in the cryptocurrency space. But did you know that this magic internet money leading the crypto bandwagon has a real carbon footprint? Surprisingly, one Bitcoin transaction generates the carbon dioxide equivalent of over 1.1 million Visa transactions, or over 89,000 hours of watching YouTube. In fact, if Bitcoin was a country, its annualized estimated carbon footprint would be comparable to Sweden at over 52 million tonnes of carbon dioxide. These statistics have been provided by Digiconomist, a platform targeted at exposing the unintended consequences of digital trends, generally from an economic perspective. It's important to delve into how Bitcoin mining is posing a threat to a zero emissions future. The amount of electricity that is used to mine Bitcoin has historically been more than the electricity consumption by entire countries like Ukraine. According to the Cambridge Bitcoin Electricity Consumption Index, Bitcoin consumes about 140 terawatt hours of electricity per year, as against Ukraine that consumes about 129 terawatt hours per year. As Bitcoin mining demands more electricity per transaction, such operations are primarily undertaken in areas where electricity is relatively cheap, like China. Due to inexpensive electricity, coal-heavy regions of China have significantly attracted Bitcoin miners over the recent years. A sizable percentage of global carbon dioxide emissions are emitted from electricity generation via fossil fuels like coal. So as Bitcoin's popularity rises, given its huge carbon footprint and energy consumption from Bitcoin mining, it poses a significant threat to the world's zero-emission future. Bitcoin mining in China is so carbon intensive that it could potentially undermine worldwide sustainable efforts and could jeopardise its greenhouse emissions reductions target. The exponential rise in the price of Bitcoin over the last year has put the cryptocurrency on the map in the investment space. At the same time, the growing importance of digital currency has bolstered the incentives to mine and use Bitcoin, increasing the likelihood of further uptick in carbon emissions. The current scenario calls for an execution of some effective measures to curb emissions via Bitcoin mining, like the imposition of individual site regulation policies. Earlier in April 2021, a coalition of crypto firms and organisations announced an industry-driven pact, the Crypto Climate Accord. It intends to decarbonise the crypto industry in record time. Under the pact, the Accord supporters have vowed to enable all of the world's blockchains to be powered by 100% renewables by 2025 and eliminate greenhouse gas emissions altogether by 2040. While the Accord has garnered support from some influential names in the crypto industry, critics say a self-regulated Accord could get in the way of more useful government policies against crypto's carbon problem. Bitcoin, being the largest player in the cryptocurrency market, is expected to cause the most trouble to the Accord due to the significant amount of energy it consumes. While some challenges persist, we can't neglect that the crypto industry is eyeing a greener future and is geared up to put decarbonising efforts into action. But whether this Accord will turn out to be a game changer for the crypto industry or not is yet to be seen. Well, that's all for now. I'll be back with more shows on clean energy, renewables and climate change themes very soon. I'm Liv for Kalkine.